Somewhere in South Texas right now, there's a rocket standing on a launch pad. In a few hours, it's going to lift off, come back down, and land itself upright on a floating platform in the ocean, like something out of a movie that shouldn't be real yet. And everyone watching is going to lose their minds. That's the image people have of this company. Unstoppable, printing money, the most impressive thing humans have built in decades. Here's what almost nobody watching that landing knows. The same year SpaceX pulled off some of its most jaw-dropping launches ever, it lost close to $5 billion. Not lost like a rounding error, an actual, real, on the books loss. And that same year, the people writing the checks looked at all of that, the losses included, and decided this company was worth almost $2 trillion. That's more than Boeing, Lockheed Martin, and Northrop Grumman put together for a company that is, on paper, losing money. And I'm not pulling that number from a rumor or some random blog. That's sitting right there in SpaceX's own IPO filing, the legal document they had to hand over before they were allowed to sell a single share to the public. So this isn't speculation. Something genuinely doesn't add up here, and it's coming straight from the company itself. So either every investor putting money into this thing is bad at math, or there's something happening inside SpaceX that has almost nothing to do with rockets at all. Something quietly making the real money while the launches get all the attention. And once you see what it actually is, I promise you're never going to watch a Falcon 9 landing the same way again. So let's open the books on this thing. Okay, so before we get into where the money actually comes from, we need to deal with something basic first. What does owning SpaceX even mean? Because for almost the entire life of this company, you couldn't just open an app and buy a share. SpaceX has existed since 2002. It didn't show up on a public stock market until June of 2026. That's 24 years of being completely closed off from regular investors. So how did anyone own a piece of it before that? A few ways. You worked there and got stock as part of your pay. You were an early investor who got in before anyone knew if this whole reusable rocket thing would actually work. Or, and this is the interesting one, you got access to something called a tender offer. Here's what that is in plain terms. Because there's no public stock market setting the price of a private company, SpaceX would periodically open a window, usually about twice a year, where employees and early investors could sell some of their shares back to the company or to a small group of approved buyers at a price that SpaceX's own board decided on. No trading floor, no app, no strangers bidding against each other. Just a private number set behind closed doors based on how the company was doing and how much demand there was to get in. That was the entire game for over 2 decades. And then in June of 2026, that door finally opened to everyone. SpaceX listed on the NASDAQ under the ticker SPCX, priced its shares at $135 each and raised $75 billion in a single offering, one of the largest in history. So now you actually can own a piece of this company the normal way, like any other stock. But to understand what you'd actually be buying, we need to rewind and watch how the price tag on this thing got so absurd in the first place. Let's trace the number. This part is honestly one of the wildest timelines in modern business, so stick with me. December 2024. SpaceX runs one of those private tender offers we just talked about, and it prices the company at $350 billion. Already an enormous number for a private company. 1 year later, December 2025, same kind of deal, insiders selling shares, and the price has jumped to roughly $800 billion, more than double in 12 months. Then, in February of 2026, Elon Musk merges SpaceX with his AI company xAI. Suddenly, you're not just valuing a rocket and internet company anymore, you're valuing that plus an artificial intelligence company, and the combined entity gets priced at $1.25 trillion. 4 months after that, in June 2026, SpaceX actually goes public, and the IPO prices it at just over $1.75 trillion. And right now, as of this video, it's trading somewhere around $2 trillion. Add that up and you get this. In about 18 months, SpaceX's valuation went up roughly 6 times over. Picture your house going from $350,000 to $2 million in a year and a half, and you're in the right ballpark of how unusual this is. Numbers like that don't happen because a company got slightly better at its job. Something structural has to be going on underneath it. So let's actually go find out what that is, and it starts with a question most people get wrong. If I asked you right now, how does SpaceX make its money? What would you say? Probably something like launching rockets, right? NASA missions, satellite deployments, that kind of thing. And for a long time, that would have been the correct answer. It's not anymore. Here's the actual breakdown, straight from SpaceX's own IPO filing for the full year of 2025. Total revenue, $18.7 billion. Now watch where that money actually came from. $11.4 billion of it, that's 61%, well over half, came from Starlink. That's the satellite internet service. Just internet subscriptions beamed down from space, only about $4.1 billion. Roughly 22% came from actually launching rockets for outside customers, NASA, the Space Force, other companies putting satellites into orbit, and then there's a third piece, about $1.8 billion, from something called Starshield. Think of it as Starlink's military cousin, an encrypted version of the same satellite network sold to the Pentagon and intelligence agencies. So sit with that for a second. Less than a quarter of SpaceX's revenue actually comes from the thing it's famous for, building and launching rockets. The majority comes from selling internet access. SpaceX isn't really a rocket company anymore. It's an internet company that happens to own the rockets that let it build and maintain its own network. That single fact rearranges basically everything else you're about to learn about this business, so keep it in your head as we go deeper. Because here's where it gets even more interesting. Starlink isn't just SpaceX's biggest source of revenue, it's the only part of the company that's reliably, consistently profitable. In 2025, Starlink generated $4.4 billion in operating profit on a margin of around 63%. To put that in perspective, that's not a rocket company margin. That's a software company margin. That's the kind of number you'd expect from a subscription app, not a satellite network. And there's a real reason for that, not just luck. Once SpaceX has already built and launched the satellite constellation, which to be clear is an insanely expensive thing to do, signing up one more customer costs them almost nothing extra. There's no new rocket to build, no new satellite to launch, just one more dish getting shipped to someone's roof and one more subscription payment landing in their account each month. Economists have a name for this shape of business. High fixed costs up front, but almost zero marginal cost per additional customer. It's the same shape as Netflix or Spotify or basically any software company. You pay a fortune to build the thing once, and then scaling it barely costs you anything. And the growth numbers back that up. Starlink went from about 10,000 beta users in 2021 to over 1 million by 2022 to over 10 million active customers across more than 160 countries by early 2026. That's not gradual growth, that's an exponential curve. And here's a subtle detail worth mentioning. While they were chasing all that growth, the average amount each customer paid per month was actually falling. SpaceX was deliberately trading a bit of revenue per customer to grab more total customers faster. Then in May of 2026, they reversed that. They raised Starlink prices for the first time in a meaningful way, which tells you something about where they think they are in the story. The land grab phase is winding down and the start squeezing more profit out of what we've already built phase is starting. Now, here's the question that ties everything together so far. How did SpaceX even get launch costs low enough to make something like Starlink financially possible in the first place? Because launching thousands of satellites into orbit is not cheap by default. The answer is the single biggest innovation this company is actually built on, and it's not artificial intelligence, and it's not Mars. It's landing a rocket and using it again. For basically the entire history of spaceflight before SpaceX, rockets were single use. You'd spend tens of millions of dollars building this incredibly precise, incredibly expensive machine, use it exactly once for about 9 minutes, and then either let it burn up on the way down or watch it sink into the ocean. Imagine if every time you wanted to fly somewhere, the airline had to build a brand new 747, fly it one time, and then throw it away. That's what rocketry looked like for 60 years. SpaceX's real breakthrough was figuring out how to land that first stage booster back on Earth, refurbish it, and fly it again, sometimes dozens of times. And the cost difference is enormous. A brand new Falcon 9 booster costs SpaceX over $62 million to build from scratch. But once they've already built it, landed it, and can reuse it, launching that same booster again costs somewhere in the range of $20 to $30 million. That's not a small discount. That's the difference between a business model that works and one that doesn't. And this is the hinge point of the entire video, so I want to say it plainly. Without that drop in cost, Starlink doesn't exist. You simply cannot afford to launch thousands of satellites into orbit if every single launch costs you $60+ million from a clean sheet each time. Reusability is what made cheap repeated launches possible. Cheap repeated launches are what made Starlink possible. And Starlink, as we just covered, is what's actually paying SpaceX's bills. It's a straight line, but almost nobody watching a rocket land on a barge realizes that's the actual chain of events they're witnessing. Let's talk about the other big piece of this, the part people usually get slightly wrong in the opposite direction. A lot of people assume SpaceX is basically a government-funded operation. That's not quite true, but it's not completely off base either. It's more nuanced than either extreme. SpaceX has landed over $22 billion in cumulative federal contracts from NASA, the Department of Defense, and the Space Force. That's a real number, and it matters a lot to the stability of this business. But here's the detail that changes how you should think about it. Most of these are what's called firm fixed price contracts. That means the government agrees upfront to pay a set amount, no matter what it actually costs SpaceX to deliver the mission. If SpaceX manages to do the job for less than that price, they keep the difference as pure profit. If they blow through the budget, that's their problem, not the taxpayers. That structure matters because it rewards exactly the kind of efficiency SpaceX has built its whole identity around. It's a very different arrangement than the cost-plus contracts a lot of older aerospace companies still operate under, where the contractor essentially gets paid more the more the project costs, which, if you think about it for 2 seconds, is a pretty strange incentive to hand someone. One concrete example. Back in April of 2025, the Space Force awarded SpaceX a contract with a ceiling of more than $5.9 billion, covering a big share of national security launches through the rest of the decade. So government work isn't a handout here. It's earned revenue with real delivery obligations attached. And it happens to be structured in a way that specifically benefits a company that's good at doing things cheaply, which SpaceX is. Okay, so if Starlink is this profitable and government contracts are this stable, you might be wondering something. Why did SpaceX still lose almost $5 billion in 2025? Because remember, that's the number we opened this whole video with. 2 words, Starship and XAI. Starship is the massive next-generation rocket SpaceX has been test flying, the one that's meant to eventually take people to Mars and to make orbital launches even cheaper than what reusable Falcon 9s already achieve. Building, testing, and repeatedly blowing up an experimental rocket the size of a skyscraper is an extraordinarily expensive habit. And then there's XAI. The artificial intelligence company Musk merged into SpaceX in early 2026. On its own, XAI lost over $6.4 billion last year. So here's the actual picture, and it's more interesting than the company is struggling, adjusted for the accounting noise, depreciation, heavy R&D spending, or all of that. SpaceX actually generated around $6.6 billion in adjusted EBITDA in 2025. That's a rough measure of how much cash the core operations are really throwing off. But once you factor in everything else, Starship's development costs, XAI's losses, all the capital intensive bets, the company still posted a net loss of $4.9 billion. In other words, this isn't a company that can't make money. Starlink is proof that it absolutely can. This is a company that's choosing to take almost every dollar it generates and pour it straight into 2 enormous, unproven long-term bets instead of banking the profit. That's a deliberate strategic choice, not a sign of weakness. Now let's put SpaceX side by side with the old guard aerospace companies, because this is actually where the trillion-dollar valuation starts to make more sense. Companies like Boeing, Lockheed Martin, and Northrop Grumman typically trade at somewhere between 1.5 and 3 times their annual sales. That's a normal valuation range for a low-margin government contractor. And a lot of them are still working under those cost-plus contracts we mentioned, the ones with less built-in incentive to be efficient. SpaceX, meanwhile, is being priced far closer to how you'd value a fast-growing tech company. Because with Starlink in the mix, that's functionally what a huge piece of it has become. And on top of that, SpaceX now handles the overwhelming majority of the world's commercial rocket launches. Competitors like Blue Origin, ULA, and Arianespace haven't come anywhere close to matching its launch frequency, let alone its costs. So when you zoom out, investors aren't pricing SpaceX like a rocket company that happens to be pretty good at its job. They're pricing it like a company that has quietly built a near monopoly on getting things into orbit, wrapped a genuinely profitable internet business around that monopoly, and is now betting the proceeds on making the whole thing even bigger. But before this starts to sound like a one-sided commercial for SpaceX stock, let's be honest about the risk side, because now that this thing actually trades on the Nasdaq, this isn't just trivia anymore. It's a real decision some of you might actually be considering. A few things worth sitting with. First, a huge amount of this company's trajectory is tied to the decisions and public image of one person, Elon Musk. That's a concentration of risk you don't see in most large companies. Second, Starship. the rocket that's supposed to fund the next decade of this company's ambitions, is still in the test flight phase with no guaranteed date for when it becomes reliably, repeatedly profitable. Third, the XAI merger folded an entirely separate, currently loss-making artificial intelligence business into the equation, which adds a whole new set of risks that have nothing to do with rockets or satellites at all. And fourth, not everyone agrees this price tag is justified. Some financial analysts, including Morningstar, have put SpaceX's fair value at roughly 55% below where it actually priced its IPO. So here's the honest, balanced version of where this stands. There's a real bull case, a company with a genuine near monopoly on rocket launches, a wildly profitable internet business generating real cash, and a track record of pulling off things that sounded impossible a decade ago. And there's a real skeptic's case. A company priced for a future that hasn't happened yet, carrying real execution risk, real key person risk, and a brand new unproven AI business bolted onto the side of it. Both of those things are true at the same time. That's what makes this genuinely interesting instead of an easy answer. So let's zoom all the way out, because I think this is the part that actually explains everything else we just covered. That almost $2 trillion price tag isn't really pricing what SpaceX is today. It's pricing a bet on what SpaceX becomes if Starship actually works. Here's the scale of that bet. Right now, a reused Falcon 9 launch costs somewhere around $20 to $30 million. Some industry cost estimates suggest that if Starship becomes fully, reliably reusable, the cost of getting a kilogram of mass into orbit could eventually drop to somewhere between $2 and $5 million per launch. That's not a small improvement. That's the kind of cost collapse that doesn't just mean a few more satellites go up. It's the kind of collapse that starts making things like Mars missions, point-to-point travel across the planet in under an hour, and even space-based data centers financially plausible for the first time in human history, rather than just science fiction. And that scale of ambition is actually part of why SpaceX needed to go public at all. Some reports suggest that the amount of capital required to fund something like Mars colonization and orbital scale infrastructure is simply bigger than what even the deepest private markets could realistically supply. So think back to that $4.9 billion loss from the beginning of this video. That's not a company failing to figure out its business model. That's the current real-time cost of a company trying to buy its way into building the infrastructure of a brand new economy, one that doesn't exist yet. And investors around the world are collectively betting nearly $2 trillion that it's worth the price.